But some of these storage facilities and offshore facilities for gold and so forth, you better read the fine print there too, and see if there's any ways or reasons why, if they could delay delivery at any point in time and so forth. And
under some circumstances.
Yes, I think when you borrow, for your gold and so forth. So my point is, for any of you out there who do that and have your gold stored somewhere, you better read those fine prints, and don't take it upon your person who talked you into doing that. If he tells you something, don't believe him. Read it yourself. So just be very careful out there. And you know what? It's true. I got an email in, and it's very true. You can't print any more gold. And if you really look to where gold was at from the first of the year, it's still up 13% year over year. So it's still having a good year. Sure, it's not 1900, and sure, we've come back. And for those of you bought from this level to the higher level, yeah, you're seeing an adjustment in your gold pricing. But from the first of the year, it's still doing better than I think anything out there. So you got to keep things all in perspective. And we were at these. We dipped below into 1,500, I believe, one day. Just back in September, and then it came back. And I don't think it was this low though. But so keep it in perspective.
Yes, it was.
Was it this low? I thought it was 1,550 or something. I don't know.
Well, that's where we're going to be tomorrow morning.
But so just keep things in perspective. Nothing has changed. It just continues to get worse. And what's happening in Europe is very important with what happens here. And here's the question in from Ken.
Well, wait a minute. I better tell them about the forecaster.
Oh, okay. Well,
I don't want you to get mad at me.
Hurry up.
The international forecaster is about business, finance, economic, social, and political issues all over the world. I got another question here. Just hand it to me. And we publish by email on Wednesdays and Saturdays. Runs around 35 or 40 pages. We have a hard copy that goes out twice a month for those who are not on the Internet. And for those of you who want to find out what's going on in the world, it's there every week for you. You can get a free introductory copy by going to theinternationalforecaster.com. theinternationalforecaster.com. You can also go to www.intforecaster.com, intforecaster.com. For those of you who would like to ask a question, we answer them all. Or if you would like to get a copy of the publication, or if you'd like to get a copy of our report on gold and silver shares, email us. And that address is Bob, B-O-B, at intforecaster.com. Bob at intforecaster.com. And for those of you who would like to call toll-free, that number is?
That number is 1-800-375-4188. That's 1-800-375-4188. Give us a call for your complimentary issue. An important fact today is no sellers here in physical gold. So, if folks are holding on.
Did you hear that, everybody?
Yep.
No sellers. And I talked to 3 brokers that I'm familiar with. They had no sellers. And a question just came in, as I told you. Do you think we are close to a GLD-SLV default, since they will no doubt settle in fiat? And that's an interesting question, and I got to be honest with you, I can't answer it because I don't know. Now, one of these days, there's going to be a big blow-up. It'll probably emanate from COMEX, and if you've noticed, throughout the entire COMEX complex, volume is drying up. particularly in gold and silver. And that means people are exiting. They won't play there anymore. They'll go into the physical market and they'll buy. And so that's what's happening. And they're going to put themselves out of business by being part of this charade that goes on and has gone on for many years, and part and parcel of their involvement at MF Global and their refusal to immediately pay the customers off. And that will affect the LBMA in London, which is like the COMEX, and it should wipe out SLV and GLD because they do not have the physical that they say they have. They've got options and puts and derivatives of one kind or another plus futures. And what percentage that makes up of the whole, we don't know because they won't tell us. So when they won't tell you, you don't play their game. Go ahead, hon.
Is the Fed playing a game with the markets, forcing the long holders of equities and commodities out of their margin long positions to give the illusion of deflation so that it'll be easier politically to create more money out of nothing? And will the Fed and member banks step in the market at the manipulated bottom and buy up all the stocks that were sold in this manipulated movement down? And will the move back up be just as powerful back up in January, February, or March?
The move back will be more powerful, and I think that they're going to try to keep the stock markets as high as humanly possible. That's going to be a Herculean task. But when gold and silver, as an example, bottom out, and if I'm right here at approximately 1550, if it holds and it starts back up again, there'll be buyers, big time. Or, better yet, they'll be short covering. And so from some level, we're going to see something powerful, and that level is being watched by everyone. And so the answer is yes, they will be in there as buyers, and probably short covers as well. Incidentally, the downside in the stocks today, the better quality ones, was minuscule. I mean, really, really minuscule. They actually had a decent day considering what went on. They were off 4.4%, 2%, 3.7%, 2.63%, and 5%. With gold being down as much and silver as much as it is, and what they're telling you here is the market in precious metal stocks and in the precious metals is sold out.
Mm-hmm. Well, Bob, we talked earlier today, and gold was actually up this morning. They were showing yesterday's future February contracts close, showing that it was down when the spot was really up. But then once the market finally opened and everything, then it just it did open up and it went down. But I mean, for how many hours did they show yesterday's February close? And when the market first opened, gold was up this morning. It was up a couple bucks. So again, it just adds to that psychological. And of course, they talked about gold being down, $35, $40 at the open and so forth. And well, you know what? What is it? They'll talk it true.
It was incorrect.
Yeah, it is. Just flat out lie.
Incidentally, I'm looking at the volumes, and they're slightly above normal. They vary from stock to stock, but they're altogether they're slightly above normal.
Here's a question in from Paul. says the banks have bought bonds from the PIIGS